Keith here for Am I Rich? And today we're going to talk about a not so cheap stock. It is Starbucks. The ticker symbol is SBUX, and this company is a little bit pricey, but let's see if we can find some value in it. So, if you don't know what Starbucks is, well, let me tell you, it's a coffee company. It's a coffee retail company. It's a coffee high-end retail company, or high-end coffee, however you want to word it. So basically they sell overpriced coffee, but with an atmosphere that people really appreciate, and it's been doing very well. And it is probably the world's biggest coffee franchise out there. It's probably not the biggest in individual countries, but if you go to big airports around the world or big cities around the world, Starbucks is everywhere, and it's pretty popular. I would say most people know about it. So what is the price currently? The price currently, as I'm filming this, I think it's $69.75. It has been going up quite a bit. I think if you bought it like a year ago, it's up 25%, maybe more if you bought it at the low. I think it was down maybe below $50 a share. But okay, so it's been on a tear. Let's go through the financials, because you gotta dig into it. Is it really worth it? You know, there could be some hype behind this, but what's going on? So the PE ratio is 30.7, which is a little bit high for most companies, but Starbucks is popular, so maybe it's justified. And then a forward PE ratio of somewhere between 25 and maybe a worst case scenario is 28.7. So there's kind of a range of estimates for what they're going to earn, and that's what dictates that. The price to book ratio currently is non-existent because it has a negative equity, and that doesn't sound very good. It's kind of a trend along the lines of many fast food companies these days. But in the case of Starbucks, they attribute a lot of this debt that they've taken on, or liabilities, from basically Nestle, the company Nestle, giving them a lot of money, like $7 billion for kind of rights to use their brand on different products that they'll sell like in other retail stores, like grocery stores and whatnot. So at least that's my understanding. And so if you kind of ignore that, whether that's justified or not, you could get to a price to book ratio of maybe like in the 21 range, which is pretty high. So yeah, expensive stock right now, but its dividend might be an interesting thing. It's currently at 2.1%, and this company's had a pretty good track record with dividends. And its 6-year growth is at 14 or so percent. I usually write like 5-year growth, and I didn't because they had like a massive crash in their earnings 5 years ago. And so if you looked at that, it would look like they had like a 70% growth, which maybe isn't fair. So that's why I just kind of ignored that. So yeah, like what would be the reason for owning Starbucks? Well, the reason is, one reason, they just came out with their not just, like last year they came out with their financial plan for the next little while, and they mentioned, now to back up a bit, they have gotten rid of their Tazo tea brand. They used to have a store called Teavana, which they got rid of, and they had some different partnerships with different companies like in Hong Kong or China, and they've kind of rejigged those. So they have gotten rid of things that have basically they don't think are profitable or not as successful. Now they're trying new things like Uber delivers your coffee, at least in Tokyo or somewhere in the US. But is that really, you know, all? Well, the main thing is they expect to grow their earnings with their new algorithm, they say, which the wording is a little bit fuzzy for me, but anyways, they think they can grow it by over 10%. So that sounds pretty good, 10% earnings growth. Now that's in generally accepted accounting practices. If you were to look at the normal accounting practices, you're probably looking at like 7 to 9% growth in their earnings. So yeah, not too bad. But wait a second, didn't I just mention their like 6-year growth was like 14%? So I don't know that this is really like gangbuster exciting, but yeah, it's something. So like they're basically a little bit slower growth, but so I think it's probably an achievable target, basically, from what they're saying. They've kind of rejigged the company, and now they're doing something, trying to hope for profits, basically, like increase in profits of what they used to have. So yeah, so that's the reason I think the stock went up. Another thing is it went up also during the time when a lot of other stocks were crashing in 2018. So it seems to be kind of a recession-proof stock. So that's an interesting point there. So the bull thesis around this stock, well, I have to look at price from a value perspective. And honestly, if this company was like a good big company, maybe S&P top 10 or something, but not the brand is kind of getting old or something, I would see this company having a stock around $28, maybe $29 per share. And right now it's like 69, so it's pretty high for that. Now, if you do look back though at Starbucks history, it has been doing kind of very well in its stock price, because I think a lot of people who love the company of Starbucks like to put a little bit extra money. Like they're not looking at the price necessarily. They're just like, yeah, I want to own Starbucks because I go to Starbucks. So the stock price is generally overpriced. Like it's generally probably 3 times, at least 2 times what it should be. So if you consider that as staying stable, and you expect their earnings to grow at least the next quarter or so by almost 10%, then I can see their stock price being, $69.20 some cents. So basically, very close to where it's at, a little bit under. Now, if they do get their earnings right, or maybe beat their earnings, you could see the stock stay stable at its current price, or maybe jump up a little bit. And if a recession comes along, you might see it grow as well. So those are the bull theses. And one extra tidbit, which I think this might be the real value in Starbucks. The real value might be its dividend, because right now it's at 2%. But if you look back, say, 6 years ago, it was a quarter of the price of the dividend that is existing now. So if you had purchased shares like 6 years ago, you would now be earning 4 times as much. So if you're earning 2% now, and if they kept growing at that rate, their dividend. Now, I don't know if this is really going to happen or possible, but considering they're not a horrible company for getting money in, they could do this, and you could see their dividend keep growing and if, like 4 times what it is now, that's 8%. So if you got 8% a year just on dividends alone on a stock price that appreciated, maybe 7% a year, maybe 9%, it's not that bad. And honestly, I see Starbucks, there's a very strong potential for it to be still popular in 5 to 10 years, still going strong, still opening franchises in smaller areas. And just like McDonald's, like even if they started losing money, they wouldn't be out of the picture. They'd still be around for a while. So I see Starbucks as that kind of company right now. It's like it has a huge presence. A lot of people love it. They're pretty good at managing their media issues. So I can see this company being around for quite a while. Good dividend and a growing dividend typically. So you could win out with a really good dividend buy here. Now, wait a second, there could be a bear thesis to this though, right? Yeah, the bear thesis it's kind of a big bear thesis. So the big bear thesis would be if Starbucks was not popular for some reason, some major gaffe in their publicity, then they could lose their like prestige in their stock, in which case I could see, you know, it dropping maybe 60%. Another more maybe short timeline issue would be right now they're trying to like really expand in China. They have expanded in China already, but they continue. That's where a lot of their growth might be, and they are popular in China. A lot of people are using them. They have some kind of partnership with Alibaba for like promoting their apps. But people who, a lot of Chinese like Starbucks, but they also might not like Starbucks. I think they go with trends very quickly, like they ebb and flow into different trends typically. So I can see them suddenly not thinking Starbucks is great. And also, I can also see the Chinese government, you know, if they're having a trade war, they may put pressure on people to avoid Starbucks. So that would be the downside scenario in the short term. So you could see a lot of pressure on their growth and earnings in the short term from maybe China. And in the long term, I think you have to have a major gaffe in their publicity, or, you know, they'd have to really like change the way they do business. They did make some blunders with maybe opening Teavana and not, you know, are not a very profitable business. So they could potentially get into a whole bunch of bad businesses in the future. And that could slowly dwindle their company. But I think in the next 5 to 10 years, I see that as a pretty slim chance. Like, it would be, I think putting this company into a tailspin would take a lot of time. And so for me, I personally think this company, the positive side is probably more likely than the bull or the bear thesis on this, the negative side. So, but that said, it's at such a high price, you know, it could easily drop 10%, and unless I want to hold it the rest of my life, which I think there might be better stocks, then I'm probably going to just, I would say this is like a hold right now. I'm probably not going to buy right now, but I would love to know what you guys think. Feel free to put some comments down below if you want, and yeah, do you guys like Starbucks? I mean, most people don't mind it if they like coffee. So yeah, thanks for watching, and we'll see you in the next video.